Oil prices keep trading near two-year highs. The energy crisis in Europe has definitely spurred the demand for fuel. Yet the pace of growth that oil has been demonstrating since November last year indicates a purely speculative nature of its rally. At present, the market awaits the decision of the US Federal Reserve. If the quantitative easing program is reduced, oil quotes will surely slide. At the same time, if the regulator postpones its decision until its next meeting in November, crude prices will stay at their current levels. Still, oil is unlikely to develop a strong uptrend since the speculative mood is prevailing in the market. Meanwhile, US crude stocks fell over the past week. The decline turned out to be deeper than expected, which may support higher oil prices. Against this backdrop, Brent has advanced to $75.50 per barrel. However, the upside movement is getting slower as it's facing a barrier at the resistance level from where another pullback is possible. This will actually mean a technical correction for Brent, as its price is unlikely to drop deeper amid the supply shortage. The upward target is found at the resistance area of $76 per barrel. After reaching this level, the price may then move higher towards $77.50 per barrel. Yet a short-term technical correction is also possible. As for WTI crude, it finished the correction at the psychological level of $70 a barrel. Traders managed to recoup some of the early losses so that now the price is moving higher to the range of $72–73 per barrel. This is where the resistance area is located, and WTI is likely to perform a short-term pullback from this point. In the dollar versus the ruble pair, sluggish activity of the ruble gave way to a complete halt. The Russian currency, just as the rest of the currency market, has frozen ahead of the FOMC meeting. If the committee announces the start of the asset purchase tapering, the ruble will rapidly lose its ground. Otherwise, it may rise slightly, but not for a long time, since the rollback of the QE program will begin sooner or later. The decision can be postponed until November. In this case, markets will have more time to prepare for the changes. The dollar versus the ruble pair has stopped its uptrend after reaching the resistance level of 73.55, from where it pulled back. The number of positions on the US dollar is declining, thus sending the quote below the mark of 73. A short-term rebound is possible if the price holds below 72.70 rubles per dollar on the 4-hour time frame. In the meantime, the euro has depreciated against the ruble by 1%. A sharp change in the rate is attributed to a strong news background, so the speculative trading will not end there. From the technical viewpoint, the level of 85.35 may serve as a pivot point where the price has entered a flat channel. If the quote holds below 85 rubles per euro, the volume of short positions may increase. Otherwise, the flat movement followed by a pullback looks like the most likely scenario. Whether the ruble will continue to fall or will find the balance, we will find out tomorrow. The meeting of the Federal Open Market Committee will end by the time the trading on the ruble is closed. And that's all for now. Thank you so much for watching and stay tuned.